So welcome to our Twitter space. So this Twitter space is the beginning of a series of events. We will talk about the different products that PrimeDAO has, and we will invite our partners and the people that we have from the community. One moment. And the people that we have from the community to discuss about what are the benefits of being in an ecosystem and what are the future plans that we have. So together we have Zahad and Fig. Zahad is from PrimeDAO, and Fig is one of our beloved partners from Paladin. So I would love to invite to the stage, firstly, Zahad to tell us a bit more about his experience, how he started, and give us an introduction.
Hey, thanks for having me. Thanks for organizing this. So I've been with Prime for almost about a year. Met these guys and gals, and the end also. You know, we have a few folks who are also non-binary and all that. Shout out to them. About a little over a year ago, when folks were first organizing around Dallas, Lisbon, I was very into the idea that we could basically make the entire DAO economy more of a cooperative one. And at a high level, that's really what Prime is doing, right? Like, we are very much interested in using the benefits of competition and cooperation to weave together a more collaborative ecosystem between DAOs and to enable other forms of coordination simply than just buying and holding tokens and all that, right? So that's really what we're all about and what our products are all about. And super excited to be here with Fige and Paladin, because from our perspective, what they're doing is super interesting for DAO governance in the DeFi space and necessary. And yeah, so we're happy to chat about what they're building and what we're building together.
Awesome, thanks a lot. And what about you, Fig? How would you like to give us a background and tell us a bit more about Paladin too?
Yeah, sure. Thank you for having me first. I hope the noise is okay. Seems to be. So I'm one of the co-founders of Paladin, governance management protocol, we could say. We've been building for the past 18 months. We started in a hackathon at I think it was ETH Global last January. Before that, I used to be a banking lawyer, but we've been full-time trying to help support the growth of governance. What we're building at Paladin has started from the impression that DeFi projects and crypto projects more generally were growing much faster in terms of utility, of use, than they were in terms of structure, especially the governance structure, and that we would have a lot of problems because we were building a multi-millions or multi-billion-dollar projects that did not have the right structure to develop and to grow as needed, and to organize internally. So we've been trying to build these structures. Unfortunately, there's a double problem right now. The first is that crypto used to be extremely speculative until very recently, which meant that if you try to do anything else outside of yield, well, people would simply not come. And the other reason, which is quite important too, is that most governance opportunities are non-lucrative. If you add a paywall on top of it, you're basically adding friction. And the biggest problem of governance is that there's already too much friction. So we've been trying to experiment around this. We first started with vote lending markets, which we call influence markets, and we're basically starting to build on top of that, now that we're actually becoming more and more lucrative. So yeah, sorry for the big intro.
No, sorry, necessary, man.
That's amazing. And how long have you been in the space? And yeah, how do you see the behavior around that? Because I have been in the governance space for last year, actually, And I totally get your point. Do you feel that with this model, people are more interactive and they are keen on to participate?
So I would say actually no. The metric we use a lot that is still quite relevant is that there's roughly 5% of the tokens today in decentralized governance that are actually used to govern. But there was, I think it was last week, there was a study that was published by Chainalysis that revealed that the top 1% holders held roughly 90% of the tokens. So you have a double problem. First one is of distribution, and the second one is of participation. We tried to solve the ones of participation by making fairer distributions where founders and investors have smaller shares than they used to have in other projects. The problem that we see is that long as you have a free market today, what's going to happen is that naturally the strong holders are going to be institutionals and professionals, and the weak holders are going to be retail. That's the second problem of basically sell pressure out of what we call weak hands and retails. And the second one, which is a bit weirder, is out of contributors. It's easier, and most projects actually pay their contributors with their own governance token, right? The problem with that is that you can't buy bread or you can't buy rent with your governance token, so you have to sell it at some point. So basically, you're giving voting power to people, but they have to sell it to basically pay off their rent. So there's this paradox where we're basically stuck in a universe where our governance system is not entirely adapted to the needs that we have to govern long-term these projects.
Gotcha. That's totally very, very interesting. So Zahad, I'm curious, what is your take on that?
Well, I think like Fige is 100% right, and this is why I said that what Paladin is building is like necessary infrastructure for this space, right? Because look, we're in this horrific bear market, and maybe we honestly, I'm not trying to ask for anyone's, not trying to, what's the word here, give the gods any bad ideas, right? But basically, we may not be anywhere near the bottom. Who knows, right? You never know. And so, but even that being said, there was just an immense amount of wealth created in this last upswing of the market. And when you then look around at governance participation rates and the unique vote escrow innovations that have happened across the Curve ecosystem, we all talk a really big game about like this ownership economy and extending democratic governance and distribution of wealth and all that kind of stuff through token. But then you look at the brass tacks at the end of the day, and the fact of the matter is that the participation rates are super low. A lot of you have to kind of be first in and on the concentrated side of things to even have a chance of making a ton of money from the inflationary dynamics of some of these DeFi protocols. And so I think what Paladin is doing with governance technology in DeFi is a critical infrastructure, man. Like it's really, really fascinating what these folks have done so far. And then, Figure, I'm going to go back a little bit to your guys' launch on our platform, right? One of the key things that I thought was pretty interesting was, we wrote this piece, which, maybe we could add as an article. I know you can do that in Twitter Spaces. I forget how to do it, but basically you can add tweets and stuff. So I'll dig this up and post it. But there's this improving governance participation in DeFi with better yield strategies, the Paladin and LVP article that we wrote. And, when we were sitting down with you guys, really what made this a successful launch, from your perspective and ours, is that I remember speaking with some of your contributors, in addition to yourself, but, in separate conversations with contributors. And I was like, what does a successful launch look like for Paladin, right? Like, are you guys just trying to raise the most you possibly can or whatever? And like unanimously, your team basically said, honestly, we're doing this for price discovery. We want to know what the value is of what we're building for auto compounding, for staked Aave, for selling boosts for Curve LPs, and all that for VE curve holders. For VE curve holders, we just want to know what that price, what is the market price for that, right? And so I think that was very much in line from the beginning with what you folks are building and why it's important.
Totally.
Yeah. So actually, it's kind of funny because we've been kind of fortunate, and I'm saying that in the totally ironic way, when you see our build phases and the market. So basically, there was a large crash in basically end of April when we did our LBP, and we just released our latest product Quest last month during the Luna crash. So we've been going counter-cyclical from the beginning of the year, which is kind of funny because we're arguably doing well. We did not raise tens of millions, but that was not the goal of the LBP. As you mentioned, we wanted to do price discovery. The reason why we did so is that we had to start distributing governance power, and we had been doing it through a non-transferable token beforehand to our most hardcore followers. We wanted to go to the next level because there's a huge design space that's only available to people who actually have a live token. What we've been seeing on top of the V token models that we've been working a lot on, and a lot of new models that have been explored. And we needed to have that live token for a lot of reasons, regulatory, ethical, etc. We thought that just setting up a price and say to people, choose to buy or sell, was just a bad choice. And we've kind of been, I wouldn't say rewarded for that, but when you look at our token compared to a lot of the market, we've had a much softer fall in the sense that maybe we're minus 60% over the year, where almost everyone is minus 85 to 95%. And that's honestly sad, but it gives us an advantage in the sense that we are in a good health. Our project has enough runway to keep going. And more than that, we're actually entering some kind of hyper growth phase where we realize that our latest product, which is called Quest, has a really good product market fit. We made roughly $30,000 on it this month. We're hoping to 3x that next month.
Awesome. I think like that's the key, right? Like when you look at a lot of these token go up plays, which like I'm not saying they're good or bad, right? This space needs degens. I've never ever talked shit about degens. I think it's actually good behavior because it gives us a lot of things. It gives us two in particular. You already covered price discovery. The second one is liquidity, right? And so like when you have, and obviously the two depend on each other, but like what is really interesting is then when you build something like what you folks have built, where there is actually a solid route to revenue and there's a value that you're providing that makes money out of the magical internet money printing machine, right? And that's why we're really excited about this. Is what we think the ecosystem is all about. Because, to get to sidetrack a little bit, you look at something like Olympus, and people love to talk shit about Olympus, but Olympus is still making like $50,000 a day from selling bonds and from all the things that are not even its 400 million% APY or whatever you want to call it, right? It's just why we also see value in there and what they're doing in providing a decentralized reserve currency and a bond market for DeFi. And in the same way, like other people value that as well. There's a revenue stream from it that's about as much as you can ask for under the abstractions of price and money as they are today, right? So,
that's 100% true. I mean, the fact that you basically have revenue in a crypto project is a huge thing, especially because there's actually quite a lot of projects that actually don't have revenue. So you're making a big difference. And in the current market, people who have revenue will not only suffer much less from the bear market because they can actually simply pay their people they can afford. They don't have to loan out or look for fundraising, but they actually have some very foundational basis that allows people to be confident in the project. I honestly also I wouldn't say I'm not bullish on anything, but I'm a big believer in what Olympus has been building because they built a lot of smart things. So there are things that work, there are things that don't work. Bonding has been a good place for money. I think another one that's very interesting is the fact that they introduced the concept very hardly of protocol-owned liquidity. What's very interesting about that is that, of course, it creates risk, but you're basically internalizing the market making that's necessary for the protocol to be liquid, at least part of it. So it brings two really important things. The first one is confidence. If the ship is going down, you're going down with the ship. And the second one, which is much bigger, is that you're basically getting the fees. So as long as there's going to be speculation, there's going to be hype around your project that you're going to keep building, you're basically earning fees. And this can become even more powerful because we have adopted That's pure protocol on liquidity strategy, but we have combined it with our knowledge of what has been happening in tokenomics, especially around the V token model. I just posted a thread this morning about it, but today, because everything crashed, there's a huge premium in the bribes marketplace. Basically, once you're buying $1 of emissions, maybe on Curve or on Balancer, you're basically getting $2 of emissions. So $1 of incentives gives you $2 of emissions. So as a DAO, what we're doing is that we're basically buying voting power with our own technology and getting twice as much emissions. But because we have protocol on liquidity, you can think of this as a method for us to distribute our token and getting CRV and BAL token at 50% discount, which is super powerful. And it's even better for us because we are specialized in our own governance. So there's no one better for us to distribute our token than people who are actually locked into governance, right? So for us, we're actually in a very win-win situation in the current market. And we're super excited about this because we just started farming BAL today.
Awesome. Yeah, I think like for, you know, when you look at the tireless building next generation ecosystems, I think that's like, you know, what is the DeFi ecosystem right now? If you sat down and kind of mapped it out, right? I mean, God, I don't want to do that because we only got 45 minutes for this thing, but we could be here for a long time, basically looking at the interconnections between the various players in the Curve Wars, Olympus, you know, not even getting out all the way to Uniswap and, you know, Alchemex, all these players that are building weird services that to an outsider looks super weird, but if you get into it, is an ecosystem, right? And so, like for us, when you look at our product suite too, like what we're also really excited about is as you folks begin at Paladin, you know, capture more of the folks who are out there with Staked Ave, with V Curve, and honestly VBAL, and a lot of the stuff that we're working on with VBAL as well. We've already posted about. I think there's just going to be a great opportunity to connect all of those together with value for holders and value for people who are actually doing things in the space, right? Providing value.
Yeah, that's very obvious. I think PrimeDAO's main quality today is that you guys have built an ecosystem that can onboard new projects. So for those who are listening, what's possible today is that you can go from the fundraising phase with Prime Launch to the actual bootstrapping phase with potentially Prime Pools. And then once you want to go to the growth phase, start actually going with other DAO swaps, with actually thinking about how to grow. You have the deal-making phase with Prime Deals, right? So we're super excited to test this out because it's also helping us test all our hypotheses. And at Paladin, we're really big, and I know you guys are the same. We share a lot of common value. That's very appreciated. We're very big on testing our solutions on ourselves. So that's why we have our own quest. We're going to use Warden ourselves on It's Ready. We're guinea pig for our own solutions because we're convinced we're building the best on the market. And so if people don't believe so, that's totally okay. We'll just get hilariously rich and they will watch on the sidelines. That's totally okay for us.
Totally agree on that. And I would say that would you say actually that the testing period is the basic benefit that you get in this process? Or what would you say that are the benefits that you get from being a part in the ecosystem, in the PrimeDAO ecosystem?
Well, we maybe fundraising, deal making, all of these. These are complex operations, right? And in traditional finance, you actually have bankers or consultants that actually help you around this because most of the time it's your first time doing such a complex structure and you need people supporting you to actually have these. So our hypothesis when we started wanting to work with you guys was that you would have more experience and would be able to basically help us around this. And I think this has paid off a lot. We were extremely happy about this.
Awesome. Yeah, I think like that's, you know, it's really the thing because you could, you know, with our platform with Launch, there are any number of other platforms you can launch on. Right? You can go to Copper or, you know, Alchemist Copper. Or you can you can just do it yourself. You can go to DAO House. You can do, I mean, when I say do it yourself, you can Cosmos, right? You can literally just go and start an app chain and bootstrap it, and you don't need a launch pad, although there might be one or two. But like the point being of it's not really about the launch pad. It's that the products all connect in a way that hopefully help new DAO participants, new new folks who want to start a DAO or even a protocol or whatever that will eventually be managed by a DAO. It just makes it easy for them to access every step of that on their journey. And we're still building a lot of that journey, but at least you've got launch, you've got pools, and you've got deals. And pools will be live in a few weeks, and deals and launch are out there as it's rating. So,
Zahad, would you like to tell us a bit more about pools also?
Yeah, definitely. So like pools, I'm happy we can also link, if you can find the tweet where we announced it and post it I know you can post those to Twitter Spaces or what have you. Like, how do you do that? That's funny. I sound like a total boomer on this. Oh wait, it's the plus button? It is the plus button. Whatever. I'll get to it later. But anyway, the idea behind it is basically just making a way for DAO liquidity management to be more cooperative. And how would that actually work? Well, basically, we started by looking at the vote escrow tokenomics, right, that have become a pillar to so many DeFi projects across the space. And what really caught our attention is we work super closely with Balancer, right? And Balancer announced veBAL and went live with veBAL in March. And basically, what we were thinking is that when you look at the veBAL tokenomics, right, there's a number of things you haven't interacted with it yet. There's a number of things. So basically, you can earn it by locking BAL and wrapped ETH in their BAL wrapped ETH pool for anywhere from 2 weeks to a year. You can then boost your liquidity provision rewards by 2.5x, right? And there's a number of other things you can get to. Those are the ones that stand out to me. But basically, what we thought here is that there's still kind of a problem with this, is that gauge weight voting and basically, let me back up here. This is like a complex thing to explain from a blog post into like the Twitter post, right? But basically, there's one of the things where I think is really interesting Paladin is that vote escrow tokenomics have a serious inefficiency, as Paladin has discovered, right? And this inefficiency also raises its head in the veBAL market, right? And there are reward optimizers that came about from this. And Convex was really one of the first to play into this, where they provided a platform for curve holders to vote lock their curve, right, through Convex. But that ends up giving substantial control of curve and convex, or of curve and vCurve to Convex, right? And that's not really something that you potentially want long-term for the health of that ecosystem. And so, you get these economic misalignments, you get governance centralization, right? But we think that with pools, the veBAL system can be optimized in a more synergistic way with prime pools, right? And so basically, like the holders of the 2080 pool can convert their LP tokens to D2D BAL. And this basically is going to help you earn proportional protocol fees, veBAL inflation rewards, and we're going to kind of tinker with the governance in a bit of a different way, right? So there's going to be 10% of the booster rewards that go to a common control pool to enhance veBAL ownership for the D2D BAL holders, right? They're not just going to be concentrated off somewhere else in Convex where you might not really have a say for how it gets used, right? And there's going to be a bunch of other things you're bringing to market around effective bribing, which we can get into later. But that's basically the ethos behind Prime Pools. The idea for it is that I don't necessarily think that anything that Convex or other folks are doing is necessarily wrong. It's just that it's worth experimenting to see if we can make some of the downsides out there a little more manageable, when that's kind of what we're all about.
Yeah, so I think that's something very interesting. Today we've developed two branches. At Paladin, we have the pure governance branch, which is more about parameters control, was what we originally had developed for Paladin lending. So we're actually working on a V2 right now to have something a bit more efficient, because it had this solution had a lot of failings. And we've been working on the other branch of governance, which is emissions control that you were talking about. around the V tokens. And this has been substantial. We released it last month. It's becoming more and more successful, which we're very happy about. I think when you talked about the inefficiencies, there's something really important that we have to discuss, is that these veModels enable and incentivize people to build models around it, to build more structures, wrappers, etc., which we have seen a lot on Curve, and we're actually seeing a lot on Balancer. This is really healthy for the ecosystem because it strengthens a lot the V token in question, but it adds a lot of complexity. And the more complexity you have, the more inefficiencies are going to appear because not all actors are as sophisticated or can afford the gas fees to actually follow these complex strategies. So I'll give you a very quick example. Today, the bribe market on VLCVX layer is at a much higher rate than on VCRV. The reason why that is that basically 90% of the bribes are happening on the convex layer, even though they only have 52% of the voting power. What does this mean? It means that you're basically overpaying the VLCVX, and because of that, the VCRV holders are starved out of bribes, and so the price is driven down a lot on bribes. So basically right now, you're paying 3 to 5 more when you're paying on the bribing on the VLCVX layer compared to the VCRV layer. Now, I'm not saying people should stop bribing on the VLCVX layer. There's a lot of reasons why you should keep going, but it's important to actually use these arbitrage opportunities to basically hover between the different layers. And that's the technologies we're building at Paladin. It's understanding these different inefficiencies in governance and enabling people to optimize around these. There is no one best route. It's always going to change depending on the prices of different wrappers, on the pegs, and on the different situations in which you are specifically in. So what I think is extremely interesting about Balancer is that what you're trying to build with Prime Pools, but which has always been at the core mindset of all of your products, is building the most aligned projects on top of the others, which is a mentality we share. And the reason why I think we have a very compatible business is that you guys are focused on the fundraising and the deal making, while we're purely focused on the governance aspects, which means that we can complement each other to offer the best support to different projects that are actually trying to develop their activity and focus purely on building instead of having to manage these liquidity questions, these fundraising questions, etc., etc.
Couldn't have said it better myself, man. Awesome.
Awesome. That's great. And another question related to the products. I mean, related to pools is very, very clear, and partnership, how that has helped you. What do you see in the future of your organization, in a sense that as you move forward, what being in this ecosystem, what would be the ideal collaboration that you would like to see with PrimeDAO and, of course, with the rest of the partners in PrimeDAO ecosystem?
Well, something we've been working on with you guys that's going to become more and more obvious as we get closer to Prime post release is that we want to build flywheels where people who are actually going to try to enter the Prime ecosystem are going to be able to benefit from our governance services at minimal or no cost, simply because it will be so tightly integrated into the flywheel that it's going to become seamless. I mean, at some point, projects shouldn't even have to think about how much they're spending to get a certain amount of emission. We could automate all of that and facilitate pretty quickly with pools and quests, to be honest. Our long-term vision is much more complex than that, because the truth is that we all know that tokenomics are they're not eternal. So for example, Curve's tokenomics will probably keep running and work very well, but almost no projects that actually has V tokenomics has prepared on over 300 years of emissions, right? Even Balancer, I think, is on 20 years. So depending on what they're scheduling next, they're going to have to rethink it. And there's new tokenomics that are going to be consistently invented, because these are financial structures, right? So we're going to have to keep adapting to all of these new projects, to a lot of these new ideas. So what am I expecting? I have no idea. I'm expecting to keep building on top of governance, to keep supporting governance experimentation and to keep helping the people who want to push forward governance in actually succeeding in these endeavors.
That sounds super exciting. And Common Ground would also request to talk. So please go ahead.
Thank you. So nice. Super happy to be up here. I'm Florian from Common Ground. We're a Web3 home for DAOs and basically communities that use tokens in many shapes and forms. And we have identified in particular one of the topics that was discussed here as a big problem for Web3, becoming globally adopted, which is indeed that it's super hard seemingly for many users in Web3 to participate in governance. And I really like some of the ideas that were proposed here to make this improve on this, on the protocol level, incentive level, token level, and all those things. And I just wanted to both throw in that I think also in terms of accessibility, UX, user experience, also explaining what governance is about, I think we can do a better job. But I also wanted to hear the voices of the experts, what other challenges they see that should be or need to be solved for the governance innovation contained in this Web3 space to actually start to be practically implemented in the corporate world of today, in governments of today, and in public-private services, and public good infrastructure, and everywhere else where we think those governance models would actually improve today's decision-making.
Should I take it?
Yeah, please. Or if you could also, could you repeat it and then give your take? Just because my audio has been bad. Sorry.
So from what I understood, Common Ground was just asking about, he was thinking that UX was one of the big frictions in governance, and whether or not which ones we believe this and which ones did we had in mind. So first of all, UX is a big spine in all of cryptos. It's a big thorn in all of cryptos, though, to be honest. It's a big problem. It's going to take some time for us to figure all of this out. I think it's a battle we're going to have to keep fighting. I do agree it's also true in governance, but I would kind of say it's a fake excuse for multiple reasons. I also remember a lot of people telling us before Snapshot really rose to prominence that gas fees were a big problem for voting. But there was a study that was made by Italy that basically showed that there was less than 20% correlation between gas prices and actual participation in governance. So what's really interesting is that right now with participation, we're probably tackling one of the oldest problems in the book, which is the fact that most people don't care about participating. So how do you solve that? If you look in democracies, people are going to ask you to vote maybe once, twice, thrice, maybe every 5 years, and that's it. And the rest is basically a hierarchy of professionals that are basically going to take these decisions and make all of this happen. So do we have to copy these models? I don't know, maybe. We can probably add a lot more transparency to them to be more efficient. But there's an obvious gap between the quality of governance we're having today in crypto and the actual needs we have. I would also think that another one of the big problems that we have is that we've been distributing token mainly to speculators, and these people are not here to participate in the governance system. So that's a big question because we're using today the tokens as a double standard. One is fundraising / speculating, and the other one is for governance. So there's been a lot of talks, for example, should we separate both tokens? I think it's a bad idea, to be honest, but should we modify distribution? Should we be able to basically modulate the governance power? Yeah, for sure, why not? At Paladin, we basically introduced a staking and locking system, and you get boosting voting power depending on how much time you lock. So basically, the more aligned you are with the protocol, the more exponential power you have around the governance system.
And I think that I'm sorry, Jahad, one thing, I feel that this totally makes sense because if you're a contributor that you just bought the token to be a part of the community, doesn't necessarily means that you want to be all the time there and participating in governance or taking decisions, or you might not have the skill set or the knowledge to do it. So being able to give that power to another person, it's necessary. And to give your power to a person that has more knowledge or cares more about the project. Because we say that we are interested to learn more and to participate, but in the end of the day, do we, or do we have the time to actually do that?
I think it's a good question, because like you have this, you see this pop up a lot where folks are basically saying that DAOs need to delegate more, delegate what, delegate when. Like there's a lot of stuff around that, right? And I think that we're sitting here in the midst of new coordination technology that's being built before our eyes, and so we should be putting that to work, on itself, kind of like in Ouroboros, right? Like recursively. And so it involves two things, in my opinion. Part of this we do in PrimeDAO, and the other part of it is the kind of tech that Paladin is building, where at the social layer, you need to be able to actually say, who are the parties who are involved that we are delegating to, and what are the governance rights, and when do we actually say they should be able to, what should they be able to do, what shouldn't they be able to do, and all that. And the rest is just that layer of enabling them to transact once we reach quorum, or whatever the way we decide to do it is, right? So,
Thank you so much for all those ideas. I was wondering, in the world of validation of blocks, so the kind of underlying layer where governance is now being introduced, for example, in the MEV space by Flashbots or another ecosystem, I see it happening. The concept of slashing is kind of a well accepted method to create skin in the game and ensure certain behaviors of validators. Is this something that governance or people who want to participate in the increase of the value of the token kind of have to subject themselves to, kind of be active in governance in order to also have the upside of the value being produced through that governance? Is that maybe also a possibility, or is this not applicable to governance from your point of view?
Well, participating creates value for everyone in the ecosystem. So in theory, you're passively incentivized to actually be an active member of a governance system. The problem, as Chris Russo eloquently said, is that, well, it's very easy to accumulate tokens, right? Who has less than 3 tokens in their wallet? Who has less than 5? Who has less than 10? How do you manage what's happening in 10 governance system? Even 5 is not possible, to be honest. So the problem you have is you get overwhelmed extremely quickly, and you have to choose your battles. I think if everyone was at least participating in 1 or 2 DAOs, we would be much better off. But even then, it would not be enough. So the problem would not be solved. It's interesting what you mentioned about moving up the stack of governance from purely dApps, let's say, to other infrastructure. I do believe, depending on the type of infrastructure we're talking about, the governance system should be different. There is no homogeneous governance system per se. All of them are different. I would say Ethereum's governance, the blockchain's governance, is very, very different from a dApp governance. I'm not knowledgeable enough on Flashbots to actually explain or give a comment on it. However, what I want to say, and that's something I've been, I wasn't always open about this, probably because I had a bias because we're building around governance, is that there are some dApps, there are some subjects that do not need governance, and that we should not add a token for no reason at all. There is this concept of ungovernance, or that has been explored, that's very interesting, where we see projects like Rye or Liquidity that try to literally have no governance and be automated. So my argument against them is very easy. If you have no governance, no one can update your contracts legitimately. No one can adapt to the new macro or the new game. You have to release a new product entirely, and everyone has to migrate their liquidity. And if there's a bug, you're just screwed with the bug. So having a monolithic block can be very powerful. If you look at Liquidity's LUSD, there's a very strong incentive, and there's a very interesting movement behind it. But it has its cons too. So when you're building a product, you have to choose: am I going to be able to just deploy it once on mainnet and then it starts running and it can never be touched again? Or should they have an upgradable model? And if that's the case, you need a governance system, whichever it may be.
Absolutely agree on that. Totally agree. It depends on the organization and it depends on the different DAOs. And another question that I have, and I think that is the last one, and then I would love to give the mic to the crowd if you have any other questions. So do you feel that with this model, is it possible for a project to go to full decentralization since the beginning? Or do you feel that a project should start with a core team taking decisions, and then slowly by creating the different processes, you can bring the community to take decisions?
I would say there's no perfect answer. We keep saying there's no book to actually learn how to do this. That's very true. You have projects that have been very successful that started entirely decentralized, and you have projects that started centralized and are very successful. The problem if you start entirely decentralized is the following. You're going to have a very entitled base of people who are going to be deciders. You're going to have a lot of trouble finding people who are going to need to execute the work. So you're going to have a lot of managers and very little people under them. So that's the biggest risk. And that's why you see people like Andre Cronje who rage quitted out of the ecosystem, because people expected a lot out of him and it was not his job to do all of it. So that's a big risk, which can happen also with core teams where holders actually expect a lot from the core team, but don't participate in the decision making. On the other side, when you start with a core team, the biggest risk you can have is creating a company. In the sense that the more you grow, for example, you fundraise, you give equity instead of tokens or both to a fund, they are going to expect you to create profit. And you're going to hire a lot of people. The problem by doing so is that you're basically creating an incentive that's going to be decoupled from the DAO, because the DAO wants to become independent, the DAO wants to become profitable, but your company wants to grow and your company wants to become more profitable. So at some point, you're either sharing the fees or one of them is going to lose. But either way, on the long term, both probably lose. I think the most elegant solution is something that I've seen at Prime, for example, where there's multiple companies that are basically being created. And as the team grows, instead of having one company that's growing, you basically, members can leave and create their own company, or more companies basically join the model. We don't talk about this officially, but the way at Paladin that we have is that we have right now an admiral company that has some funds, and basically all of a lot of other companies that are working around it, helping us build the way Paladin is. This is a model that we've been seeing growing. For example, Aave has been decentralizing their core team. Most of the big developers of the protocol basically left and created BGD, which is called Board Ghost Developers, I think. And they're basically becoming the developing strength of the Aave protocol, but they're not inside of Aave companies anymore. I think that's an interesting model that should keep being unexplored, but there is no rule book. Like, let's do whatever we want and let's see what happens.
Yeah, I think that's all really good points. I think that there is no one answer to it, but I think that it all depends on how you rate, some of the things like the financial and regulatory risk of your protocol, because if it's something that you perceive or that you've received counsel that is going to be very risky, then it makes a lot of sense to decentralize it completely from the first, from the day that it starts. There are a couple interesting examples from the last year I can think of, but one in particular is Potion Protocol, which, to Fige's point, like these guys basically took the Kelly criterion and built a DeFi primitive that essentially lets people have, they call it democratizing risk management, essentially, and they fundraise for it by selling thousands of NFTs, and that did not go exactly the way they wanted it to go, because they also raised from investors. They're going to be paying back the investors, getting off the cap table, and the NFTs themselves were all encrypted with a piece of the protocol itself. So everyone had to work together to actually decrypt the NFTs and decrypt the protocol, which they did, right? And by that way, they're basically saying by that ceremony, they're transferring the protocol from VC ownership to be a public good, which is a pretty interesting concept, and have it be fully decentralized under the control of the people who participate in the NFT sale from day one. And of course, there's a lot of pitfalls in that. Now you got to get those people who are just looking for like when NFT floor price go up to be actually involved in a complex asset management protocol, right? So it has its pluses and its minuses, but then there are other ones where I think, like with Prime, we're not fully decentralized, but we're on a path to it with each step we take. And you can see our posts in our Medium where we really talk about how our governance has evolved from where it started. And so that it's, we've progressively gone from a group of like 10 folks who are just like, let's build a thing and do some stuff, to many different working groups with their own work group, working at their own organization or organizational structure, process, and budgets. And it's managed to not be super corporate. Otherwise, I would have quit a long time ago, because I am fucking allergic to that stuff. So
I totally agree. I think that the way to move forward is to kind of start with a small team, and then the one model that you can see that you can create different small teams is creating an internal or an ecosystem to build a bigger ecosystem. So it's that we cannot survive alone, but by creating different ecosystem and different teams that they work independently is the way to collaborate and continue building together by becoming bigger and stronger. Thank you very much, everyone. And yes, please, common ground, please go ahead.
Thank you so much. I just wanted to pile on a little bit on what was said on the Potion protocol, because I also know the team and was in some ways involved on what they've built with this NFT structure. And I think also it's a really interesting example of solving actually a deep problem in DeFi specifically, which is having a team of builders that is building a protocol, but then needing to transition from building code to actually deploying and operating code. And if that code, as it is the case in DeFi by definition, is the facilitating trading, options, for example, or other kinds of things that are regulated under traditional securities and markets regulation, it actually becomes quite a hard problem to solve cleanly, such that the developer team does not have crazy legal exposure for some time until, let's say, decentralization is reached or whatever. Yep. There are different, attempts in the US at, for example, introducing a sandbox, and Hester Pierce from the SEC, the crypto mom, actually made such proposals on GitHub even. I think that was pretty cool. But nowhere yet this really exists. And so I think what the Potion guys tried to do is to find a model where there is a transition to community ownership of the protocol IP in a way where it's a really interesting kind of open sourcing transaction. And yeah, I don't think it went as planned, unfortunately. I think the complexity was way too high, and it kind of hints at the second problem or point you made about it, which is that it's super tough to find a community that's able to actually pick up on, all the things that need to be done once such a transition to community ownership was done. I actually think in Potion's case, there is a lot to be said for the community that is now working on it. So I stay optimistic. Funny enough, Common Ground kind of came out of at least me, learning a lot in this potion experiment, which was that there is a lack of real community-owned communication infrastructure. And there was a question, how can NFT holders at Potion who bought this NFT actually now communicate in a private and kind of secure space to coordinate strategies, for revealing their secret for the open sourcing, or for, deploying the protocol and doing token distributions. And there was nothing, and the only kind of default was Discord, and Discord comes with all those security problems and data leaks and just inconveniences. And so Common Ground is also kind of a result of all those real world problems you have when you try to do something in a community first fashion. And so we try to solve that.
Yeah, and I think like you're spot on, because I was a part of the NFT sale, and I'm in Barcelona where some of the core team works, so I've seen them like here and there. Literally the day of the sale, I saw Andre, one of their executives.
Oh, cool. Okay.
Yeah, I was like walking on the street, and he was like, "Yo, don't miss the NFT sale." I was like, "Of course, got you." Right? But, it's pretty funny, small world. But yeah, I think that and then to this Figue's point, right? Or I think it was Figue's talking about how some of the Aave developers transitioned out of Aave. That's kind of exactly what they did with Potion, right? That was the original point I forgot to make, which is that they then rebranded. They're a research and development firm that maintains Potion, but they have no formal in writing sort of relationship anymore, which is a super interesting transition in governance, right?
Also, because we have only 6 minutes, please, Pathmajan. I'm not sure if I'm pronouncing correctly, but please, you can talk.
Yeah, hello. Yeah, so I don't have much context on the chat that was going on here because I joined in a bit late. So, since it's all about DAO and governance, I just want to know your thoughts on how do you feel DAOs would be through fractionalization of NFTs and governance of the DAOs through the through those fractional tokens. What are your views on it?
Maybe I'll start. I will be a bit brief on that. I'm not a big believer in fractional NFTs. You can just create an ERC20 instead. The big problem in crypto, and it's not specific to that topic, is I think we tend to over complexify things when there's simple solutions that work really well, maybe already in crypto or in the traditional world. And on the other side of this is sometimes we try to reinvent the wheel. We're going to create this really complicated thing, and we refuse to actually acknowledge that there are certain problems that have not been fixed in the past solutions that will not be fixed by these solutions. I do not think fractional ownership solves fractional NFTs or this ownership solves anything that's not done by dividing a token by 2. So instead of having one token, I'm giving you 0.5 of something else. That said, there are some really interesting cases with NFT governance, but they would be rendered useless if you made the NFT fractionable. That's my opinion. It's probably very ignorant about it. I've been fully focused for the past 2 or 3 years on DeFi, and I literally have almost no NFTs.
I can chime in and say that fractionalized NFTs are most likely going to be regulated as financial instruments very soon, whereas unfractionalized NFTs that really are not about being secretly fungible, let's say, will stay most likely unregulated for a while longer. So I think that's a kind of side point to keep in mind on that.
Understood. Lunarpunk, do you have any thoughts on this?
Nope, I'm not a fractional NFT holder myself. I'm nearly not. I'm the wrong person to ask because I hold a small amount of NFTs, and the only ones that I've ever hold are ones that I considered functional in some way. So I'm the exactly wrong person to ask. And on that front, it's more like I'm very much interested in Plastics.io is a company that I supported. They're building an NFT marketplace for plastic reclamation, where they're basically using NFTs as a way to coordinate behavior around single-use plastics. Basically, they use the people who can go into any store, including one in Barcelona here at the Nescafe store. You can go in, deposit your single-use plastics from coffee pods. They mint an NFT and sync it with your MetaMask wallet. When Nescafe retires that single-use plastic out of circulation, yours and amongst a whole bunch of others, maybe sells it to Veolia or one of the major recyclers, you get a nice little NFT. You get some reimbursement because you hold the NFT. So it's pretty cool on that front. But I don't have an opinion on fractional NFT ownership. I know there are DAOs for it. Not my thing.
Before we close, one last question, and then thank you all. So Celia, you can go.
Thank you. So I just have kind of a broad question. I'm very new to crypto and Web3, and I'm excited to learn. And thank you all for helping me do that today. But I just have a question about modeling for governance and how much, obviously you don't want to reproduce like contemporary politics and that kind of structure. Have you looked much at alternatives that already exist in the world, like the Mondragon collective in Spain? And then I was also curious, and this is maybe too big a question, on how much auditing is going on with the voting in DAOs, like looking at who's actually voting and like correlations between who's voting, who they are. I'm just like, excited about the potentials for Web3 and wouldn't want to see kind of contemporary politics or power structures just reproduced in this space.
Well, I'm happy to take this one first because I think it's already too late. In some ways, they already are, right? And like, what I think we have to do is make sure, like, I don't think, Fige, I'm not putting all the weight of this in the world on your shoulders, but I think, things like what Paladin's building are really interesting, and I think that we have to be doing more experimentation in this space and definitely learning from the history of governments in this space, right? Like you mentioned Mondragon. One of the things I have a podcast, and one of my first guests was Nathan Schneider, who's wrote one of the platform cooperative movement manifesto back in the years a few years ago, and then came up with exit to community as one of the core things, core new things that he wanted to see in tech. And one of the things he says is, like, one token, one vote is fine, but in a lot of ways you've already seen that it reproduces the inequality that's out there in the rest of the world. And I'll tell you, with Prime's governance, we're experimenting with reputation. So our NFTs, there are NFTs that hold a certain amount of voting power, and you can see this if you go into Deep DAO. You can see all of you can see our votes in boardroom. You can see who holds these in Deep DAO, and we're not, as I mentioned before, in a spot where we think that we should be fully decentralized with D2D determining the outcome of everything yet, right? But I do think that I'm not super familiar with the vote audit side of things, but I know there's published papers on this for sure that get into like some of the problems with this. And the one of the major ones that I think at least Paladin will have an impact on is governance participation by proxy, because you look at governance participation in general, it is just, you want to talk about, like, people like to dunk on the United States for governance participation at like 56% or something like that. The average DAO is less than 10 or something like that. It's crazy. It's very, very bad.
All right. Well, thank you.
I can also complete a bit that answer, if you're okay with it, of course. It's actually very important. I agree it's too late. We've already made some decisions, especially, for example, token voting, that for a lot of projects are sunk costs, in the sense that today, when you're a multi-billion-dollar protocol that has raised millions from VCs, you cannot really stop token voting, like not easily, simply because you have literally legal and financial obligations to actually create value and to let these keep going. So that's already a sunk cost for a lot of old and pre-existing projects. I think there's a lot of experimentation that has been made and a lot more that needs to be made. Something that we're underestimating a lot is that blockchains are the biggest social sandboxes we've ever had. So before blockchains existed, once you write an economic or a political thesis, you had a theory, you had to wait for years to be published for someone to actually help you and test it out on a small scale. Today, you can just code it yourself or find someone to code it and test it out. So in the next 10 to 50 years, we're going to have exponential experimentation around governance, around social coordination, etc. And it's going to be extremely fascinating. We can expect our society to dramatically change in the next 50 to 100 years because of that, in a good or in a bad way, to be honest. And we all have the responsibility around to keep making sure this is going in the right direction. However, and I think that's very important, crypto governance today is not working as intended. There are some very quick fixes we can try out, but the biggest one is simply applying previously used methods, creating councils, having a lot of delegation around. I agree that what was just said before, our biggest long-term, medium-term focus is developing proxy voting solutions, and I don't mean a delegation or something, but thinking of a way for people to have easier access to actual governance information. The biggest problem we have today around governance is that there's a lot of work. There are huge challenges. The problem is you will never earn money over governance. When you ask for a paywall, you're basically adding friction. So it's disincentivizing people to actually participate. So the problem with that is that you need to find a solution to actually push forward the governance system while also having revenue. The quote-unquote easy solution say, oh, but we can have a public goods system and it's basically going to be funded by people. The problem with that is that the people who fund are going to be people who have a financial interest or who actually have a way of earning money. So you cannot have public goods funding without speculation. So the other way around is to actually have a two-sided business model, one that accepts that there are corrupted parts in governance and that you need to build with them, and the other that's going to try to push forward and thrive in this ecosystem, which is what we're trying to do at Paladin.
Thank you.
Thank you so much, Vic, for that great explanation. And unfortunately, our time is up. I would love to sit more here and talk about it, talk more about governance and more about the ecosystems. If anyone would like to join our Discord and have more discussions around that, then you can find the link on the Twitter space. And I would love to have a further discussion later on within the upcoming months with you, Vic, and everyone, and Common Ground also. Thanks everyone for coming, and see you very soon. You will be able to find the recording also on our YouTube and probably on our Spotify. Thank you, everyone.